All right, so how does this new brewing giant change the beer landscape? To discuss, we're joined by Adam Johnson, the founder and author of Bullseye Brief. Adam, good to have you.
Good to be here, and especially that we're talking beer, Michelle.
Yes, one of your favorite topics.
Indeed.
I know this for a fact, Adam. Now, AB InBev, SAB Miller, $100 billion takeover, now creating the third, well, actually controlling a third of the world's beer market.
Oh, it's the largest brewer out there. I mean, at this point, really, there are very few companies in the world that compete. China Resources Beer is one of them. Asahi in Japan is another. But the fact is, this is a massive deal that concentrates what was already a concentrated market.
Well, given that, were you surprised that regulators and investors actually approved this?
Yeah, I actually was. Because, you know, when you think about it, the benefit here for the brewers is quite obvious. They get bigger. The benefit for consumers maybe is better distribution. You know, if you're in a distant location, you might get smaller beers that you wouldn't have because now they're going to be distributed by an even larger entity. But prices are going up. You know, you look at AB InBev, right? Budweiser, et cetera, and Heineken. Their volumes are down 13 out of the past 16 quarters. They're selling less beer, but the profits are up 7% because they're raising prices. And that's what it's all about.
So now, with this greater control, does that mean that us as consumers can just expect to have prices hiked even further?
Michelle, your beer prices are going up.
Well, fortunately for me, I'm not a really big beer drinker. But
you prefer wine?
But for those that are,
yes.
In terms of the product, is there going to be any change there? Those that like Miller Coors and Miller Lite, does that mean they're going to have any change in the taste of their beer?
No. They have a winning formula. They guard that formula very closely. The change that you are seeing, however, is that these massive brewers are going out and buying craft beer. So you think that you're buying a craft beer that's a quaint little tasty beer made in a quirky location somewhere you've never heard of. Chances are it's owned by SAB Miller InBev at this point. I mean, they literally have hundreds of craft brewers under their auspices.
So what does this mean then for the beer industry as a whole in terms of profits? This is good news.
If you are an investor, it's great news. This is manna from heaven because it means that a concentrated industry is getting even more concentrated. You're going to see prices rise. You're going to see profits go up for the beer makers. Again, if you're an investor, this is great news. If you're a beer consumer, probably not so much.
Okay, so if you're an investor, InBev stock up 2% year to date. What's your outlook there?
This is a stock that's already trading at about 24 times earnings. That's a lot to pay. That's more than the S&P 500. And it's growing at maybe, well, volumes actually have been down, but profits have been up 5 or 6%. So how much do you really want to pay for something that's growing mid-single digits?
Adam, we've talked about the impact on craft beers and a little bit about consumers, but with this beer giant controlling 30% of the global market, what does it mean across the production line, across the supply chain, from anyone from bottling companies to barley producers? Yeah,
well, I tell you what it means. They're going to squeeze everybody at every level because they have that power. So, in fact, if you look at what AB InBev has done over the past couple of years, call it the past 3 years, it's lowered costs by 7 percentage points. It's squeezing people down because they can. They're the 18-pound gorilla. 18 or 180. I think it's a 180-pound gorilla, Michelle. They have the ability to squeeze people down, and that's what they're doing. So when you ask what does it mean for the industry as a whole, it means that all the different people along the way, the distributors, the providers of hops, they are getting squeezed. They're making less. InBev is making more. It's keeping more of the profits, and it's also raising prices, which means consumers are getting gouged.
Now some smaller companies like Yuengling in China opposed this merger.
Of course they did.
But nothing they can do about it now.
Yeah, they're too small to have any power. I will say, however, there may be a little silver lining for companies like Yuengling in China, and that is simply that if you have larger companies that are raising prices,
you too will.
You, in theory, can rise with them.
Rising tide lifts all boats,
Something like that.
On that
or,
one.
or all beers.
All beers. So let's talk more about Asia because it is set to become the biggest beer market in the world. How does all of this affect Chinese brewers?
So the Asian beer market right now is arguably, it may even cross over this year. You may not have to wait till next year for 34% of the world beer market. The U.S. is about 32%. So it's already happening. They drink a lot of beer in Asia, and China is really leading that charge. So you look at the largest brewer in China, China Resources Beer, that trades in Hong Kong. Earnings are growing 40. You heard me right, 40%, because the volume's up and because the prices are up.
Now, Adam, here's something that could be quite interesting. SAB Miller had a 54% stake in Coca-Cola Beverages Africa.
Yep.
And there has been talk that InBev may be eyeing a Coke takeover. It's backed by 3G Capital, which has a growing relationship with Warren Buffett, a major Coke shareholder, and he was very instrumental in that whole 3G Capital Heinz takeover. What's your take on this?
Well, when you think about the synergies of distribution, it actually makes perfect sense. There's no overlap because they're totally different markets: beer, water, soda, et cetera. So from an antitrust point of view, you could argue actually that this deal could happen. AB InBev is probably one of the only companies in the world that could buy Coke because its Coke is so big and because the numbers are so high. Remember, they just closed this one deal for $104 billion. Could it happen? You're just going to have to wait and see on that one. I mean, that would be the ultimate coup for Warren Buffett, but he has a knack for this sort of thing.
All right, we'll keep our eyes out for that. Thank you so much. Good to have you, Adam Johnson, founder and author of Bullseye Brief. All right.